we're at the second week of May, and the CoreLogic index report has came out. So I wanted to give you an update on telling you what's going on in the market, what's going on in the capital cities, what's going on from a regional town perspective, how the market's going, how the market's traveling. So let's get into it. And I want to show you what's going on. So I'm going to share my screen and go from there. So as we can see, 2023, okay, April. Okay, and I'm going to zoom in a little bit so we can just touch on this, okay? As we can see where we are today, in the last 12 months, we've had negative growth in Sydney, 12%, negative 12%. Melbourne has been negative 9%. Brisbane, 8% negative, then 3% increase in Adelaide, and then 1.9 in Perth. And Perth is still trending pretty well. From a quarterly and monthly perspective, it's doing pretty well. And then, of course, in total return, it's 6.5%, it's doing pretty well. As Hobart's slowing down a lot, 12.9%. Hobart had its big run back in the, after 2012, 14, it took off. 1.6 increase on Darwin, and then a negative 8% in Canberra. And then as you can see, combined the capitals and combined the regionals are not performing quite well at the moment, same with capitals, but that's combined. There's more regionals towns than what there is, of course, capital cities as well. So what do I want to talk about? I want to talk about what's going on. Of course, we have a look at the COVID tough peak of what happened here during that COVID period. 27% in Sydney, 17% in Melbourne, 42% in Brisbane, 44% in Adelaide, 25% in Perth, etc. 37 in Hobart, 31 in Darwin, and 38. So what is going on? What is happening? And what's some of the changes? As we can see, regional did outperform all capital cities, which is something that people do not take in consideration. As we can see, combined 41% was the average, and 25% in the capital cities was the average. Okay, so that's pretty cool to see that and what's happening here, and this from a dwelling perspective. So at the moment, the nationwide in Australia, where negative annual change is 8%. Okay, so the property market's not growing too well here in Australia from what that CoreLogic is saying, but of course the devil's in the data here, and that's where you've got to really look at this stuff with your eyes open and actually read the information, understand what is going on. So let's talk about I guess this is from the home values and what is going on here from total listings. As we can see, 2022 there is compared to 2023, and then of course the previous 5 years average was, as you can see, total listings is less than what there is. Okay, it's been reducing in the last 7 years. It just keeps decreasing and decreasing. There's not enough properties out there. And then new listings, once again, 2023 is below what COVID period was. And then, of course, below the previous 5 years also. Okay, and so I can see this still trending down from my understanding. It's only saying there's 24,000 properties, new listing properties over the last 4 weeks. And as we can see, the active listings, there's 83,000 properties in the last 4 weeks also. So, if this keeps going the way it's going, there's going to be markets that just can't resist, but they still have capital growth because of these situations, depending on where the markets are as well and what markets they are. Okay, and I look at this and it's pretty crazy to see this, because if I go at old data and have a look at what happened back in early 2020s and the early 2019s, same thing again. You had the every single year, and every year was just getting less and less and less with the new listings and the total listings as well. So as you can see, units and houses, of course, of course, there's always going to be more houses available. The unit market is starting to come up to that that line, that average line that they're trying to average line of where it is. Of course, people are building more and more units as the years go on, and trying to create more dwellings, and there's going to be more density in the cities and the capitals, and even in some regional towns as well. So because of that, people want to live in these desirable locations. Now, if we look at the rents, there's a housing and the unit market. The unit market's kind of taken off with all the rents. They're all kind of trending upwards, especially your Adelaide's. Your Perth, of course, is doing tremendously well. Of course, Melbourne's doing pretty well. Brisbane and Sydney, the rents have gone up crazy from a unit perspective. Okay, so the unit market's going ballistic. There's not enough properties in Sydney. That's the main thing, and Brisbane's on fire as well from a unit perspective. We're actually having some strong growth there. Now, if we look from a housing perspective, what takes the cake is, of course, is Perth, Adelaide, and Brisbane. Then you've got Sydney, you got Melbourne, you've got Hobart, you've got Darwin, and you've got Canberra. So you've got to be watching out where you're putting your money these days. As you can see with the dollar line with Canberra, it's with Darwin, it went up pretty radical, 22%. Now it's started to decrease. Not just that, but if we look at this, the average here, of what is happening in some of these markets. If we look at the average national dwelling gross yield is 3.9%. Okay, so meaning that's the gross yield, of course, for an average. From the regional, it's 4.6. From capitals, it's 3.7. I look at this and I see some of the regional towns, they're doing quite well. 5%, 5.1, 6.4 in WA. So you still have some good yields. Some of the capitals always have very low yields because the property prices are much more expensive there. But I look at this and I go, you're having 12% growth on your rental income, 11%, 12%. That is astonishing. The average is 4%. 3 to 4% in Australia wide, and so if we look at that, I'm looking at that and saying, okay, well, if your rents are going up that ridiculously, that's keeping up with inflation. It's doing better than what inflation is. Inflation's at 7%. Not just that, this is from a capital city perspective. If you go into the town, sometimes the towns are doing more than that. Some towns are doing 18% of annual change in medium rent price, meaning that if your rents are going to go up and interest rates do go up, or you're going to be in a situation where you're going to be in a safe haven. I've got a property in Brisbane, Ipswich. Okay, I've put my rents up $70 this year. $70, this one big hit. Now you might think that's unfair, you might think that's too much, but that's what the current market is doing. There's no properties available. My property's gone up from 380 to 450, and it's just crazy, because there's no properties there available. And I got it, so I'm happy with that, of course. But as an investor, that property there, you get scared as interest rates will go up. My interest rate on that property is 7.4%. Okay, I've got that on a very high interest rate, reason being low doc, but that's fine. So for me, if I leave it and don't put it up to where it should be, of course, I'm the person that's going to be out of whack, and of course the mortgage is going to cost me more. You buy correctly, these things will happen, and your property will still grow from a value perspective, from a rental perspective, and that's going to help you make the difference as well. Now, where I want to kind of touch with this data is, this is where the devil lies into the data here. If we look at some of the trending markets here, if we look at Sydney, every market is trending negative in the capitals of Sydney. If we look at Melbourne, there's only been one location that's classified as positive growth, and that was the inner Melbourne city. Okay, 1.6%. Okay, but majority of it was negative. Brisbane, of course, there's some suburbs. Ipswich is positive, of course. Doing quite well. Your Moreton Bay region is positive, as well as Logan. Okay, once again, I look at the data as well. It's still doing well, but of course, there's suburbs and suburbs. Okay, we look as well. Adelaide is on fire. Okay, Playford is a great region, doing tremendously well. Two Ways is doing tremendously well. Salisbury is a great market. The Orca-Paringa is a great market also. So you can see some still strong growth there. We have a look at Perth. If we look at Mandurah, we look at your southwest Perth. Your Rockinghams, your Kiwanis, your Gosnells, your Armadales. Great markets, and so you can see some strong growth there still. Hobart's negative. We look at Darwin, it's kind of positive, and some negatives there, and then ACT. So, but the cool thing is, if we look at regional towns, regional is still outperforming your capital cities. New South Wales, as you see some of these like Griffiths, and you see your upper Hunter Valley regions, you see your Wagga Waggas, just consistently growing, consistently performing. Same with your Victorian regions, of course. You've got your Wangaratta's, and you've got your Sheppartons, and you've got your Bendigos are doing still well, but not as good as what they were once upon a time. But if we look at Queensland, regional Queensland is still doing tremendously well. Okay, Port Douglas is on fire. We look at your Wide Bay, which is your Bundaberg Bay, your Rockhamptons, of course your Bundabergs, and your Toowoomba's are still on fire. And then South Australia, of course, their regional towns in Barossa Valley, and of course your Limestone Coast, which is like your Mount Gambier regions as well, are on fire also. Then of course we come back to up here with WA. Of course WA is still doing tremendously well. Okay, Bunbury on fire. as well, some of these other markets as well. So, this is something to keep in mind. Of course, Tassie's still doing well. Your Bunbury, not Bunbury, Burnie is still on fire, so it's still doing pretty well, and your Launceston's starting to slow down. Launceston was a great market, now it's kind of starting to ease up. So, once again, hopefully this gives you a bit of clarity of what's going on, some confidence here that there is still growth. As you can see here, compared to your capital cities, you're seeing a lot of negative, and so a lot of those people are starting to plateau. Reason being because some of them, like Brisbane, of course. Brisbane took off back in 2019. Of course, there were some areas that took off in 2019, but they're doing tremendously well. And it's not sustainable to have 44% growth of what they did during COVID, as you can see here, and they've done it for a couple of years, which was ludicrous. Okay, nearly properties, nearly growing 50%, which is crazy. So hopefully that gives you a bit of clarity about the current market, what it looks like, a bit of confidence, a bit of understanding of there's undersupply of properties, okay, not enough dwellings coming to the market, rents increasing, okay, certain markets doing well, certain markets not doing so well, okay, and I'll be excited to have the new May 2023 when that comes out at the end of or at the start of June, and see what that data shows and tells, because it's pretty exciting, and I just see more positive growth for the Australian property market.